success story. Africa is a continent on the move. Africa is rising. And as we know, some of the fastest growing economies in the world is in Africa. But the tragedy of the African continent, as you rightly say, is what we do is that we export wealth and we import poverty. And intra-Africa trade, if you look at the sub-Saharan region, is a mere 7%. So as Africans, we do not trade amongst ourselves. If you compare the intra-European trade, it's in excess of 70%. Intra-Asia trade is in excess of 55%. So clearly as Africans, we do not trade amongst ourselves. And the reasons are numerous, but one of the challenges we face in the African continent is infrastructure and the lack of infrastructure to trade amongst ourselves. As you go across the African continent, what you see is that all roads leads to the port, is to get goods out of the country and to get the finished goods back into the country. But connecting countries is quite a difficult thing.
Which is things like roads and railways.
Absolutely. The other challenge we find in Africa is border posts. It takes significant amount of time and money to cross borders. And this drives the cost of doing business in Africa up. I'll give one example. If you want to ship a 20-foot container from Shanghai to the port of Durban, would cost you about $2,000. To get that same container from the port of Durban to Gauteng would cost you $2,000. So our cost of infrastructure is quite lacking.
Phil, now your job is to ease this trade, to facilitate it, to make it easy. What do you see as the problems, the biggest obstacles, and how are you solving them?
Well, I think one of the biggest problems in Africa, we've got this huge need for infrastructure, but it's still government's capacity to actually bring bankable infrastructure projects to the market. That is a huge problem. And I think a lot more can be done there by development finance institutions, development agencies, to assist governments to build the capacity to put these infrastructure projects in place in a sustainable manner. We can then bring finance. I think the finance, although the financing need is huge, we can bring finance for bankable projects. And certainly export credit agencies are one of the methods in which we finance these long-term transactions that really require foreign currency financing, and that in country they don't have the necessary resources to actually finance.
And you're like a bank, aren't you? You're taking on some of the risk, Mandisi, that the players would take on. You're facilitating.
Definitely. I think it's a partnership between us and the banks, in that the banks provide the liquidity, and through our insurance, which is political and commercial risk insurance, we leverage the banks and provide risk mitigation, enable them to go to countries which generally will be more challenging. For instance, go to countries like the DRC and other places, Sierra Leone, Ethiopia. These are new countries where we're seeing more trade patterns going into those countries. So that's the benefit of that partnership that we have with the banking sector.
You know, just looking at what Stanley said earlier, you talked about border posts and you talked about infrastructure. Now, infrastructure is not easy just to build roads and railways. You'd think that if there was political will, border post issues could be sorted out.
Well, I think there's two issues with the border posts. Firstly, it's countries almost pushing the sovereignty to a vast level. But if I just go back to infrastructure, the infrastructure deficit across the African continent over the next 40 years, we need to spend about $93 billion per annum. Now, the point that you made, Vilna, is absolutely essential in terms of the ability to fund those projects, to take it out of feasibility into bankability. And that's taking far too long. At the moment, Africa funds about 45 billion of that 93 billion infrastructure. So money is being spent. But one of the challenges is that we are inefficient in terms of rolling out infrastructure. Estimates are that we probably waste in excess of $17 billion in inefficiencies. And that comes back to how do we as a continent become competitive? And that has got to make sure that we have, not only we have efficient infrastructure, but the cost of that infrastructure has to be affordable.
Phil, you say the capital is available, the mechanisms are available, people like you facilitate. What's the obstacle? What's the thing, if you could wave the magic wand, that you would fix up?
Well, as I said, actually empowering governments and also getting more cooperation between governments for these bigger infrastructure.
What's stopping that?
Political will, I guess.
Lack of will.
Lack of will, I guess, and capacity. Lack of capacity in government institutions to actually, take projects forward in a sustainable manner.
Mandisi, are you able to go to a government department and say, look, we know you've got capacity issues, we can help you. We can help you meet your agenda and our agenda?
Our support for sovereign lending has increased quite dramatically in the last few years, which is quite a positive development. We've seen positive economic growth on the continent, which has enabled some of the governments, to become active in the infrastructure space. Places like Ghana and other places, Tanzania and so on, where we've supported those type of transactions. But again, one must still be selective. I think the democratic system in those countries must work, because you want long-term certainty that even in a change of government, the new government will still be committed, to pay for those loans. So that's very important to get that system up and running. Definitely, we've seen in the last 4 years large numbers of growth of SA activity. I think to date it's about $64 billion exposure of SA exposure on the continent. So that's been a positive increase. Most of that has been in infrastructure in the resources sector, with the discoveries of oil and the mineral resources, where there's greater activity, by economies such as China and other countries then from the OECD countries also trying to compete. So we've seen, I think, more recently greater activity.
Okay. I'm going to ask Stanley to just sum up in a moment. I know it's a big topic, but we just try to highlight a couple of issues. But Filna, export credit for South African companies in particular. You're here, we're facilitating South African companies. Are they using it enough? Are they using it to the degree which they could?
I think they're increasingly using it more for specific reasons. In Africa, it has become almost a competitive disadvantage if you cannot also with your contract offer a financing solution. And we're seeing increasingly our exporters talking to us and saying, well, we actually want to offer a full finance solution with our contract. So certainly yes they do. I think Africa at the moment is on the map, and because of its positive growth rate, it should realize that these sources of funding is available. And we also see that increasingly foreign ECAs, not just our own ECA, Export Credit, ECIC, but other ECAs are willing to support other funders to support their exporters in Africa. There is certainly still it's a very small percentage of other ECA's books that are actually it's support in Africa. So there's a huge potential to grow, and they're willing and they're able, and their exporters are also looking for new markets in which to grow. So it is an absolute opportunity, and therefore